You've probably heard of Bitcoin, right? The digital gold rush that's been making headlines and turning nerds into millionaires. But have you ever stopped to wonder, how do you get a piece of this crypto pie? Well, this one is for you. We'll take you on a roller coaster ride through the essential chapters of crypto investing. From educating yourself, because, hey, knowledge is power, to securing your investments, we'll even dish out the secret sauce on crafting an exit strategy that can make you leave the game like a pro. Trust us, you don't want to miss this. Educate yourself. The world of cryptocurrency starts with something called blockchain. This is essentially a digital notebook that's open for the world to see. It's like an accounting ledger, but for every transaction that's ever happened in a particular cryptocurrency like Bitcoin. What's groundbreaking here is that once a transaction is recorded, it's there for good, indelible, and transparent for anyone to verify. This is what makes cryptocurrencies like Bitcoin so secure and trusted. But what are cryptocurrencies? Simply put, they're digital or virtual currencies that use cryptography for security. Imagine having a unique special code you could trade for goods or services, just like you'd trade a dollar bill or a gold bar. The only difference is there are no physical bills or coins to handle. Everything is online. Some of the heavy hitters you might have heard of include Bitcoin, Ethereum, and XRP. Now you might be wondering what makes this system secure. That's where cryptography comes in, an advanced way of coding that ensures only you can access your digital assets. Think of it as the backbone of the blockchain, providing another layer of security and making the system bulletproof against fraud. Once you understand these basics, your next step is to keep yourself in the loop. The crypto world is ever-changing. It's like a river that never stops flowing. The key is to keep yourself updated to navigate through it successfully. Reputable news outlets like CoinDesk or Cointelegraph are your go-to sources for in-depth analysis and the latest cryptocurrency trends. And hey, bookmark these sites to make it a habit to read them. They could be the difference between spotting an opportunity and missing it. Then there's the community aspect. Online forums like Reddit are packed with people like you, learning and discussing the nitty-gritty details of the crypto world. They can offer a fresh perspective or even some insider tips. Social media is another tool in your arsenal. Platforms like Twitter are filled with crypto experts sharing their wisdom in real time. These amazing threads will teach you what's happening around the cryptocurrency world. Just ensure you're following people who know what they're talking about, not the ones shouting the loudest. So, now that we've got the basics down, you'll need to know what you're getting yourself into by analyzing your risk tolerance. Assess your risk tolerance. Risk tolerance sounds fancy, but it's basically asking yourself what you're comfortable losing. Yeah, nobody likes to think about losing, but it's a crucial part of the game. Are you the type to go all in hoping for a big payday? Or maybe you're cautious, wanting a more steady, predictable growth? Your answer to this will set the tone for your crypto journey. But let's not stop there. Setting your investment goals goes hand in hand with understanding your risk. Are you looking for quick profits, or are you here for the long haul? Your goal should be showing you how aggressive or conservative you should be. Once you've figured out your comfort zone and mapped your goals, let's talk money. Specifically, how much of it should go into cryptocurrencies. Experts often advise that only a small portion of your total investment capital should be in crypto, like 5 to 10%. Why? Because the crypto market can be as unpredictable as a cat on a hot tin roof. Allocating a small percentage helps you keep your financial balance even when the crypto market decides to do somersaults. Feeling empowered to take risks? Good. Now let's sharpen your skills to ensure those risks are calculated and not just leaps in the dark. Analyze and monitor. So how do you pick the winners from the sea of numbers and graphs? First up, you will need to familiarize yourself with technical analysis. Sounds daunting, doesn't it? But it's just a fancy term for looking at charts to predict future price movements. You've got trend lines that show the general direction of prices and indicators like the moving average that help you spot patterns. Mastering these tools is like getting the playbook of a sports game while it's still happening. You get to see the strategy behind the chaos. You will also have to think about fundamental analysis. This is where you evaluate the actual asset behind the charts. For a cryptocurrency, you want to check out the team running the show and the technology driving the coin. Are they innovators or just copycats? Then there's market demand and competition. A coin that solves a real-world problem has a better chance of reaching the moon than one that doesn't. So, keep an eye on what each coin aims to achieve and who they're up against. And with those two major analyses, you will surely have the right foundation. Next, you'll need an exchange. This is where you will be buying and selling your cryptocurrencies. Choose a reliable exchange and your first asset. The first thing to check is the exchange's reputation. You wouldn't buy a car without reading some reviews first, right? Same goes here. Look out for user testimonials and maybe some expert reviews. You want to make sure the platform is reliable and, most importantly, legit. Now, how about security features? You will want two-factor authentication and cold storage options for your digital assets. These are like the locks and vaults of the crypto world. Why entrust your hard-earned cash to an exchange that doesn't prioritize security? And let's not forget supported cryptocurrencies. Not all exchanges offer the same coins, so make sure the one you choose has a good variety, or at least the ones you're keen on trading. Alright, you've chosen your arena. Now let's talk about your first gladiator, your first crypto asset. Before you jump into buying Bitcoin because you heard your neighbor's dog's previous owner made a killing with it, do some research. Different coins serve different purposes and have varying degrees of volatility. Some are great for quick gains but are riskier, while others are more stable but offer slower growth. Make sure also to consider fees and taxes. After all, you don't want unexpected costs eating into your profits, do you? Got your exchange and first asset lined up? Perfect! But remember, even superheroes need sidekicks. This is where diversification comes in. But before we delve into that, how about you pause for a second, like the video, subscribe, and turn on the notification bell. And with that said, let's move on. Diversification. Think of it as a safety net. By spreading your investments across different assets, you reduce the risk of a total wipeout. Plus, a well-balanced portfolio can actually give you a shot at higher returns. You're not putting all your eggs in one basket, so if one egg cracks, you've got others to fall back on. But how do you go about it? Simple. Start by considering assets that are different from what you already have. If you started with a high volatility crypto like Dogecoin, maybe add some stability with a more established coin like Ethereum. Then, look into the different categories of cryptocurrencies and invest in the ones that have potential. The point is to create a mix of assets that can weather ups and downs, like a well-coordinated sports team, where each player brings something unique to the table. But don't over-diversify. Then comes how to secure your investments. Secure your investments. You've got your assets and diversified, but hang on a second. What's the point of accumulating all this treasure if you don't secure it? That's like buying a sports car and leaving the keys in the ignition. So, you will need to secure your assets. First things first, wallets. No, not the leather one in your pocket. We're talking about digital wallets. There are mainly two types, hardware wallets and software wallets. A hardware wallet is like a secure vault that lives offline. That means it's virtually hack-proof, but not so easy to access on the fly. Software wallets, on the other hand, are like a checking account. Easier to access, but also easier to hack. The ideal setup? Use both. A hardware wallet for the bulk of your assets, and a software wallet for daily trading and transactions. You will also have to consider two-factor authentication. Most platforms will guide you through enabling 2FA. Just make sure to set up a backup and recovery process. You know, in case you lose your phone or forget your password. Now, when should you exit? An easy question, right? You exit when you're a millionaire. I'm kidding. Have an exit strategy. Well, a well-thought-out plan involves setting specific profit targets or recognizing significant market changes. If your crypto asset has hit your preset profit target, it might be time to call it a win. On the flip side, if the market's changing and you're seeing your portfolio dip, it might be smarter to pull out before a free fall. Now, how do you make your grand exit? Here, you've got a couple of routes. You can sell your assets back into the market. The other option? Convert your investments to stablecoins or even fiat currency. Stablecoins are less volatile, and fiat, well, it's good old cash accepted everywhere. So don't get caught up in the ride that you forget about the destination. In a game of high stakes, knowing when and how to cash out can be your ultimate winning move. And there you have it, your roadmap to crypto investing. You're now armed with knowledge, strategies, and a heck of a lot of insight. So which part of the crypto world interested you the most and why? Drop your answers in the comments below, and let's learn from each other. Don't forget to leave a like and subscribe. In the meantime, watch our previous video on how to become a millionaire through real estate investing. Thanks for watching. See you in the next video.